Good morning, traders. It's 8:10 a.m. Chicago time on Wednesday, the 13th of October, 2021. We are starting on a delayed basis today. Had some technical issues this morning with my data, and there's no point getting on and talking when I can't see the market. So this is episode number 2093 as we approach 2100 here in the next week and a half or so. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully you can hear me loud and clear. Give me a mic check if you will. Here's the pre-market summary sheet. We're looking at a market that is mixed coming in. The S&P, which settled around 43, 40, 75, is currently trading at 43, 42, so basically unchanged, or up 4 basis points. The German DAX and the Euro stocks are strong this morning on surprise guidance, higher guidance by SAP, a major component of those indices. So they are, the European markets are leading pretty well. We're seeing crude come off, and we're seeing a little pop in silver and copper. Gold sitting sideways. Gold has fallen off pretty good following the key number this morning, which was the U.S. inflation rate. Year on year came in at 5.4%. Consensus was 5.3%, slightly higher than expected. Core inflation came in line at 4%. And as a result, we saw the 10 years, the bonds, and gold all dropping. The S&P had a bit of a flutter and has fallen a little bit back to 43.33 before climbing back up. So that's what's on deck today. The JP Morgan reported this morning they beat their earnings by about 25%. Delta Airlines, Wipro, Infosys, and BlackRock also reported. And for today, everybody has a calendar. I'm not going to go through the calendar piece by piece. The FOMC minutes at 2 o'clock are likely to be a mover. And then, of course, we get the inflation rate out of China this evening at 9:30. The S&P currently has traded 262,000 contracts rounded up, and has done 31.5 points of range. The point of control is, surprise, surprise, at 43.50. 43.50 is the MC point of control in this region. It is yesterday's point of control and this morning's overnight point of control. The Nirvana price for the S&P right now is 43.50. So that's where we stand. Overnight inventory is basically flat, expecting a choppy open this morning as a result. I'm going to blaze right through the review of yesterday. Yesterday expected a push into the 65, 68 area right here, 65, 68, and a drop into 33. That's the primary scenario, a drop into 33, and then a pop into the close back into 50. Here's what actually took place in our review segment. This looks noisy as hell, but bear with me here a second. This so we see the pop to 65. There was a massive iceberg there. We hit the 65 overnight, so it was the overnight high. Then we hit it at the open 65 and traded to come off. Then we dropped down into 39, establishing the initial bounce, and then it was chop fest, a really whipsaw trade, as you could see here. Very whipsaw trade yesterday throughout the day until later in the session, where we finally break through and get to our 33. We pushed the low yesterday of about 31. So this the 65 and 33 had been tagged. There was a slight sell-off. There was a bit of a rally into the close here. Those of you who are at Convergent Trading, we walked through a short trade that ended up flashing back after filling the 33 area. And then right at 4 o'clock, we got Apple news not making its targets, I think, on the iPhone 13 or something. and in either case, it was having a chip shortage, and boom, it dropped right off, and then overnight we recovered back. Here's what's happened since. So there's the Apple drop right here. This is the Apple drop. And then we consolidate, consolidate, consolidate. We sit sideways in the Asian session. The Europeans come in right here. We test down and then immediately pop right up and are relatively strong. Currently, we are tangled up. We got tangled up in the full session mid and full session VWAP around 40. That is also settlement and the close of yesterday, and we're moving back away. So we have a multi-distribution profile overnight with the neckline being around this 42.42 area right here. This 42.42. And what we're doing is we are trading right in the middle of yesterday's balance. Um, yesterday was very, very balanced, and we're opening right in that range, expecting a choppy whipsaw open this morning yet again. We're seeing a drop in gold, the 10-year and the 30-year. We're seeing that drop getting pushed back. We're seeing recovery back to the SOC on that inflation rate, the core and inflation rate number. We're seeing those come back. We're seeing the ES moving in parallel or in sympathy with that. So, in other words, again, we're opening right on top of the overnight point of control, the MC point of control, the prior session's point of control. You can see it right here, the prior session's point of control, and we are really stuck in this 43.50 area. A good day to exercise some real discipline. Yesterday was a perfect day for limit down kind of trading for most day traders. Very, very choppy. Most setups really gave a little bit, and then we saw a lot of reversals. So that's what we're looking at for today. I'm going to pop right in and do the expectations for today and let you guys kind of head on your merry way. I want to remind you that tomorrow I'm doing a webcast with EdgeClear about selecting your data. I'm doing this while I'm setting up my chart here. About selecting your data, there's a lot of confusion about market data, CME data, fees, which kind of data feeds you need for order flow trading versus other types of trading. And we'll be covering that in depth tomorrow for about 45 minutes at 4:30 Eastern. To sign up, please hit ft71.com/select-data and all lowercase to register. I hope to see you in there. Here's what we're looking at for today. So, what are the key areas below? We've established 41, 42 as the low volume node here. In the overnight session, plus settlement, plus the prior close, plus this early high before the European Open, and then beneath there, we are pushing back into that 17, 15, in fact, 19 single print area. This is the key area below us, beyond this 33, which we've hit yesterday. 33, and above us the key prices, the key price above us is, and we're at it right now, is of course the 50, the MC point of control, and so on. And then the big price, of course, is 65. This is an incredibly weak high and a triple top in yesterday's session. One top overnight, two tops during the session, and then beyond there we go to 75, and then we push to 83, And then above there, it's 91.75. 91.75 is the next MC point of control up. This is the map. Today, I'm expecting us to open and chop. I'm expecting a response back into the 40, 41 area, consolidation before it starts to tag the other side, looking for 60, 75 yesterday's open, consolidate, and then we're looking for it to start running towards the 65 even, with 75 as the key target, 75 being the key target up here, 75. So yesterday was a negative bias, sell bias. Today we have a buy bias. We do have VWAP and mid beneath us. We have poked below. We've put in a higher low overnight. I'm expecting this to start testing that 65. This 65 area, be cautious. There was a huge iceberg yesterday and a lot of trading took place at that level. And if it breaks through, if you're short in front of it, you may see a pretty big stop run and may not be happy with the stop fill that you may get as a result. So be careful trading in front of that level. The secondary is we open, we push the overnight high, squeeze, pull back, consolidate for a good portion of the session before we start to give it up for 41, back to 33, and then for the bounce. And that gives us pretty much a small poke of yesterday's low. Yesterday we finished pretty weak, by the way, but and we continued the one-time framing down on a daily. So looking for a poke below there before it starts to stabilize. We have not found firm buyers yet, and as long as the market does not find firm buyers, we are likely to advertise prices lower and continue lower until we do. Again, the next big area down is that 19, 17, 15, and beyond there, the 43.02, and then we push to 42.95 as the next big area below that. Anyway, let's keep it nice and brief. Please register for tomorrow's webinar. There's a lot to cover. And it's a way to make sure you understand your data feeds and the business in general. Good luck, and I'll catch you tomorrow morning. Take care.